Assalamu alaikum. Can you hear me? Hello, assalamu alaikum. Okay, we'll wait just a few minutes and then we'll begin, yeah?
Okay, sure.
All right, let's begin then, shall we? I'll share my screen. One moment. Can you see my screen?
Yes.
All right. Okay, so hope you guys are doing well. Inshallah, today we'll be covering bank reconciliation, which is a very which is a very tricky topic for many students. And so we'll go through bank reconciliation and we'll try to cover it and clarify any doubts that you have. And also we'll practice one or two questions, inshallah. And in that you can clarify any doubts that you may have, inshallah. So to begin with, we'll have a small explanation like we usually do, and then we'll jump into the questions, right? So when did you guys cover bank reconciliation? Was it recently in your actual class? Sister, in your actual class, was it covered recently, or has it been a while back since you covered the bank reconciliation? Do you remember? Can you hear me?
I don't remember.
All right. Okay. Okay, we'll cover it. So the bank reconciliation is a document that compares and explains the differences between a company's cash book and the bank statement, right? So during a month, the company will be recording transactions on their own. You know, their whatever payments they do, whatever expenses they have, anything that pertains to their accounts, the company themselves will have their own accounting book, which is called the cash book, right? And the bank as well, of course, records all the transactions that the company has, right? So at the end of the month, you have the company's cash book, which is what they have recorded through the month, the company itself, and then you have the bank statement, which is provided by the bank for the company's account, of course, right? And very often, due to timing and due to different factors, there's the difference between the balance between the two, and they need to be reconciled. They need to be made to. You need to know why those differences are there, because if there's any mistakes and errors that needs to be corrected, and so for the company to have a clear view on how much money they have and what's happening, right? So the bank reconciliation is very important. So usually it happens at the end of the month when you compare the bank statement and the cash book, right? So that is what bank reconciliation is, right? So one very important difference between the two is that on the cash book, right? When you get cash, when you receive money, it's debited. And it's the usual definition of debit and credit, that when you receive cash, like account receivable is debited, account payable is credited. You know, when you receive cash, you debit it. When you get an inventory asset, you debit it. When you lose an asset, you credit it. But on the bank statement, it is the opposite. So if you if you receive cash, you credit it is credited on the bank statement. It appears on the credit side. And if you pay cash, if you lose cash, it is debited. So whatever is debited on the cash book is credited on the bank statement, and whatever is credited on the cash book is debited on the bank. So they're opposite, right? Because the cash book is your recording, and the bank statement is their recording from their perspective. So it is opposite. It's just something that you need to remember, because you have to compare it. You have to compare the debit side of the bank with the credit side of the cash book, and you have to compare the debit side of the cash book with the credit side of the bank statement, right? Okay. Then we have, the steps that are there to do bank reconciliation, which is, first of all, you need to there are two methods, right? So we will I'll show you one. I'll show you both methods, and we'll go through both methods, and then you can choose to decide which one is better. Right. So basically, you have to identify which entries. Well, what are the differences between the two? What are the entries that are there in the bank statement that is not there in the cash, and vice versa? And then you need to prepare an adjusted cash balance, and on top of that, you have to prepare the bank reconciliation statement. So each question usually will have two requirements. They'll ask you to prepare the adjusted cash balance, right? And then they will ask you to prepare a bank reconciliation statement. So that's the requirements for all bank reconciliation questions. You have to prepare an adjusted cash balance, and you have to prepare bank reconciliation statement. And these are the two requirements for almost every bank reconciliation question. So these are the two methods. The first method is you update the cash book and then you prepare the bank reconciliation statement. The second method is you update the cash book and the bank statement simultaneously, and then prepare the bank reconciliation statement. I'll show you how they are different, and sometimes one may be easier than the other. Both of them work if you do it correctly, right? You have to end. You'll end up with the same answer regardless of the method that you do, as long as you do it correctly. Okay, so now there are some important terms that you need to remember, right? So the first term that we have, these are the items that are present in the cash book, but not on the bank statement, right? So at the end of the month, these items are the ones that will be on the cash book, but not on the bank statement. The first one is unpresented checks. Unpresented checks are payments that the company wants to make. Like let's say there's a company A who wants to make a payment to company B. So the company has given the check to company B to pay, but company B has not yet sent it to the bank. So the money from company A to company B has not yet been transferred according to their bank, right? But company A, as soon as they handed over the cash, the check to the company B, they recorded it as paid. So that amount has been recorded on the cash book, but not on the bank yet, because they have not received, or the check has not been entered into the system yet of the bank, right? So this will be there on the cash book, but not on the bank statement. Secondly is deposit in transit or unpresented checks. Again, once again, but this is the opposite. This is money that is received by this is money that is received by the company from the company A is receiving money from company B, either by method of a check or even by normal cash, right? So they have entered the cash into their system, into their cash book, but the bank has not entered it yet, because maybe the money has not yet arrived, and so on and so forth, into the bank account itself. So this is another difference, another thing that is there in the cash book but not on the bank statement. And thirdly is cash book errors, mistakes that is made by the company's accountant. Maybe they have a purchase that is 2,000 ringgit, but they entered 1,000. So this is an error. So of course this error is there on the cash book and not on the bank statement, right? Okay. So those are the things that are usually there. Errors, or those are the items that are there in the cash book but not on the bank statement. Items that are there on the bank statement but not on the cash book. First is dishonored checks. So dishonored checks is when the company has deposited a check with the bank, right? So they want to make a payment to another. The company A wants to make a payment to company B, and so they deposit a check at the bank, right? And then they write it off. They enter the payment into their cash book, but the company is not able to take that cash. Maybe the company doesn't, sorry, the bank is not able to take that cash, maybe because the company does not have enough money or for any other reason. And so this money, this check is returned back to the company. And so, that amount is that amount is there in the bank statement, but not on the cash book, right? So that is one. So the dishonest checks is one thing that is there on the bank statement, but not on the cash book. Secondly, we have service charges, bank charges, maybe monthly charges or annual charges. This is something that's there on the bank statement, but not on the cash book. Uh, the third one is interest allowed. I guess you all know what interest is. It's there on the bank statement, but not on the cash book. Fourth and fifth, these standing orders and bank collections. So standing orders is, let's say a company has a regular payment to make to another supplier, maybe a 200 ringgit every month. They need to pay. So they have instructed the bank that on the 15th of every month, pay 200 ringgit, right? And so the bank does that, but the company does not record that in their accounts on the 15th every month. They will record it only once they receive the bank statement and they see, okay, the bank has paid it, the difference is there, and then they will record it. So these standing orders, they're present on the bank statement, but not on the cash book. Bank collections or direct debit, this is very similar, but the difference is the payments can be different amounts. For example, standing orders means the company will say, pay this amount on this date every month. It's a set amount, like 300 ringgit on the 15th of the month, 15th of the month, every month, pay that amount. They tell the bank. But the other one, which is direct debits, it can be something like they can tell the bank, pay the electricity bill every month. Now, they do not know when exactly the electricity bill will come. Sometimes it might come on the first day of the month, or maybe second or third day of the month. The date can change, and even the amount can change. Some days, some months it will cost maybe 1,000 ringgit, some months 1,500. So direct debits is very similar to standing order. Both are very similar, but the difference is direct debits means the amounts and dates can vary. But they've just given an instruction to the bank that when this expense comes, no matter what the amount is, or they pay it off. And then at the end of the month, it will be there in the bank statement, and then the company will add it to the cash book, right? And lastly is bank errors, which is, of course, errors that the bank has made. This is very, very rare, especially in real life is very rare, but if it happens, it needs to be accounted for, right? Okay, was that clear? You guys understand all these terms? Was that clear? Do you have any questions?
Inshallah, yeah.
All right. Sister Mira, are you there?
Yeah.
All right. Okay. Okay. So now let's move on to a question, and then we'll try to solve that. All right. Okay. Okay. So this tutorial I uploaded onto the classroom as well. It has 4 questions. We'll try to do one, perhaps 2 questions today. I'm not sure if we have time to do both, but we'll try it. And then if you guys are able to do question 3 and 4 yourself, that'll be great. If there's any questions, I can answer them, right? Okay. So, all right. So question 1. All right. Okay. Question 1, we have, so the first table is the Ramadan Berhad cash ledger for the month of April 2013. So this is the cash ledger, the cash book, and then they have the debits, and then they have the credits, right? And then on May 3rd, the following bank statement was received from the bank for April 2013, right? So they have, here they have not given it as debit and credit. They have given it as just amounts plus minus, right? So, okay. All right. Just one question before we move forward. On the bank statement, for example, this deposit value, right? This amount was deposited on the bank statement. Will it be debited or credited? Can one of you answer? On the bank statement, will it be deposited or credited? Okay. Credited, right? Yes, because on the cash book, this amount is debited. This amount has been received, or it's not received. It's it was an account receivable, and it was received on the 4th. But on the cash book, it was debited, and in the bank account, it will be credited. Likewise, so anything positive, any money that you're receiving in the bank, it's debited. Any money that you are losing is going out, it's credited, right? So these are the 2 tables, right? And then we have to, of course, go through these points as well. So part A is checks deposited on 28th April onwards are still in transit. So checks deposited 28th April onwards. That means there when is 28th April? Yeah, 20 here. So there's only one. Sorry, oh here, yes. 28th April onwards. So there's check number 459 and check number 460. These two checks are deposits in training, in transit, meaning that it has been done, but it has not been received by the bank. So it will be present on the cash book, but it won't be present on the bank statement. So you can even verify that. So you have check 459 and check 460. If you look over here, there's no 45. There's 457 and 459. 458 and 460 are not there because they have been deposited by the company, but has not been received by the bank, or the company is making a payment and it's not, the bank has not yet paid it out to the destination, right? So that's the first difference mentioned here. So yeah, B checks number 458 and 460 are still outstanding, right? C, a receipt of 1,340 on April 15th for accounts receivable was wrongly recorded in the cash ledger as 3,140. D, the non-sufficient fund check was received from a customer. Non-sufficient fund check. This is basically dishonored. These are dishonored checks. So dishonored, like I said, dishonored checks. The customer has sent the company a check, right, of 2,850 ringgit, right, and so the company, they entered that into the cash book that they have received this money. But when the bank tried to, realize that check and get the money, it showed them that there was not sufficient funds. So that check was returned. So now that needs to be adjusted on the cash book, right? And then you have the bank statement includes a payment of 1,430 ringgits. Check number 739. This check does not belong to Ramadan Barha. The bank has been notified about this error. That is this check over here. Okay. The bank recollection appears in the bank statement. The bank collection that appears in the bank statement was received from a customer. This is this bank collection. Okay. So those are the differences. So now we need to we need to solve the question. So what the two things required in the question are: update the company's cash account. This is the adjusted cash balance, like I was saying. The first thing is this is required, and secondly, prepare the bank reconciliation as at 30th April 2013. All right. 1 second.
Can I know what it means by the check deposited is still in transit and the Form B check is still outstanding?
1 minute. 458. Yeah. So the companies so deposit in transit, like I said, deposit in transit is now which the 28 April onwards, which is 459 and 460. So what they're saying is the check on this check 459, which is an account payable, the company has recorded it, right? The company has recorded it. This is yeah. So basically it's an error. So on A, you have check number 459, which was deposited on April 28th, right? And the company has deposited this check to pay a supplier or to pay a supplier, and this amount is in transit. So essentially, This is confusing. This should not. It should not appear on the bank statement because it's a deposit. Okay, my bad. Sorry. Yeah, check deposits. Yeah, this is not a. This is a payment. This is not a check deposit, right? This is a check deposit. This would be a check deposit. Yeah, this would be a check deposit. Check deposit is what the company is receiving, not what the company is paying, right? So see this account receivable, 8,440, which is on 29th April, and on April 30th, these two deposits made by their customers are paying them. This is not seen in the they have not received it in the bank statement. So that's what part A means. Deposits made 28th April and forward, which is these two. These two account receivable are not seen in the bank statement, right? So that's one difference that's mentioned here. And then checks 458 and 460 are still outstanding. So these two payments, 1,720 and 8,000, you will not see it here because the company has given the check to the company. The company has given the check to the bank, but it's outstanding means it has not yet been paid by the bank, and so that amount has not been deducted on the bank statement yet. Is that clear?
Yeah, thank you.
All right. Okay. So let's begin. Just let me. It'll be easier if I have this one word so I can highlight stuff. Okay. Just let me convert this actually. Just give me a moment, yeah. All right. Can you see my screen?
Yeah.
You can see my screen, right? All right. Okay. So this question one. Okay. Ramadan, go ahead. Okay. So first of all, like we the first thing that you want to do is that you want to see what appears. So let's do the first method, which is update the cash book and then prepare the reconciliation statement, right? So okay. So what we do here is we take the balance brought forward by the cash book. So this is the cash book, right? And we deduct from it or add to it any of the differences, anything that is there in the bank statement, but not there in the cash book. We make the difference, make the change here, right? So let's begin that, right? So that would be we have the balance brought forward. Okay, this is 14,500 as can be seen. So what we have to look at what are the things that are there in the bank statement but not there in the cash book, right? So this account receivable 5,040, it's there in the cash book, it's there in the bank statement, it's there in the uh, cash book and the bank statement, which is this one, right? So this is we can highlight that, right? Then we have we have the EFT payment, which is utilities of 1,800. This is not there in the cash book, as can be seen. Now, if it's minus over here, it should appear on the credit side. If it's positive, it should appear on the debit side. So this amount has not been recorded in the cash book, right? Okay, so that needs to be created from the cash book, but we'll do it all at once. First, we'll identify what is not there in the cash book. Then we have a payment check 454, which is a payment of 3,650, which is there, right? So we so that is there in the cash flow. We highlight that. And then we have payment one for check 455. This is also there. So we highlight that. And then we have payment check 739. This is not there. This is not there in the cash book, right? So we don't need to highlight that. And then we have EFA deposit rental revenue 3,200. So this is a deposit, 3,200, but it has not been received. It has not been shown on the cash book. So this is also something that needs to be looked at. Then we have non-sufficient check 2,850. This is also not seen on this side, so we leave that. Then we have deposit of 6,210. This is there on the cash book, so we highlight this. Then we have a deposit of 1,340. Do we have it? No, we don't, right? We don't. And then we have a check of payment of check 456, which is 2,530. This is there on the cash book over here, right? And then we have check 457, a payment of 3,280. This is also there, right? Then we have bank collection of 900. It should appear here. It's not there. So we have to look into this. And then we have payment of check 459, which is this one. It's there. So we highlight it. And then we have interest and service. Interest and service charge is never there on the cash book, because interest and service charge, the company will receive the amounts only at the end of the month, right? So it's not, as you can see, it's not there on the cash book. See, for now, we're not looking at what is there on the cash book, but not on the bank side. We're only looking at what is there on the bank statement, but what is not, what is there on the cash book, because we want to find out the company's cash cow. We need to get the adjusted company value, right? Okay.
Why did you take 14,000 and not 20,000? I thought we're supposed to take at the end of the month.
Oh yes. Wait. Oh yeah. That was my bad. Thanks. Just give me a moment, yeah? I'll be back. Sorry. Yeah. All right. Sorry. Okay. Yeah. You were right. We have to we have to put the 20,000. I made a misspelled light side error out there. Okay. All right. Now from the stuff in the bank, let's just highlight this because okay. So from the stuff in the bank that is not there on the cash book, first thing we have is EFT payments, utilities of 1,800. So this is a credit. This needs to be credited on the cash book, and so we'll credit it here, which is 1,000, because it's a minus, right? So we have utilities, right? Then these two are fine. And then we have check 739. Now, if you guys remember over here, it was mentioned here that includes a payment of 739. This check does not belong to Ramadan Berhad. So because this is an error, and this is not something that should be in the cash book, yeah. This one, there are two ways of doing this. One way is you either you enter the error over here, and then it's corrected when you're doing the bank reconciliation, or you ignore it. So we'll enter it because it's when you for the adjusted cash balance. Well, let's enter it because we'll enter it, but then later on when you're doing the bank reconciliation, that is reversed. Okay, so we have this is the payment of 1,430 bank error. So actually, this should not be there. This confused me. Okay, leave that for now. We'll look at it later, right? And then we have EFA deposit of rental revenue of 3,200, which is down the bank statement, but not on the cash book. So this is the deposit, right? Money that the company should get, right? So we debit it to the adjusted cash book, which is 3,200. We have rental revenue, okay, and then you have a non-sufficient fund check, which is basically a dishonored, it's something that is a dishonored check, right? And so this needs to be credited because it's minus over there. So we have we can have a short form NSF, non-sufficient fund check, right? And then on April 18th, we have a deposit of 1,340, which should be debited, right? They have not told us what it is, right? A receipt of 1,340 on 15th April for accounts receivable was wrongly recorded in the cash ledger as 3,140. Okay, so this was a mistake, right? So this amount of 1,340, it was recorded as 3,140 on the. So when they were supposed to debit 1,340, they debited 3,140. So what should be done is, so that needs to be corrected, right? So we put equals 3,140 minus 1,400. So this amount needs to be credited because they have debited too much. Instead of debiting 1,340, they have debited 3,140. So you need to credit the cash book error. Okay, cash book error. Okay, so that is done. Let's just as we cover them, just to now when you're doing it on a paper, you can just tick it off, right? So here we just highlight it. Okay, so this is taken care of. Now we have the bank collection, which is 900, right? So this is once again an amount that is received, right? So it should be debited 900 bank collection. Okay, and then we have interest, which is this is interest income. So the money the company has received it. So it's 80 interest income, just to make clear. And then we have service charge. This is once again an expense, so it needs to be credited. Service charge. Okay. All right. Okay. All right. Now we need to sum this up. 24,240. Now we need to balance it out. Okay, and then this amount, so this would be the balance carried forward. This would be this amount minus, yeah, so let's just do it one by one. So this is the adjusted cash balance. We have entered we have entered all the amounts from the bank statement that the company has received but are not recorded, which are these three amounts, right? So 3,200, 980, right? And we have reduced from the company's cash book all the expenses that the bank has paid, but the company has recorded, which is utilities, utilities, the EFT deposit, right? This one, and the cash book error and the service charge. All right. Is that clear? Do you guys understood how this was done? This is the adjusted company cash book value, 17,870. Was that clear?
Yes, yeah.
Okay, all right. So this is step one, right? And step two is preparing the bank reconciliation statement. Preparing adjusted cash balance, right? This, step two is preparing bank reconciliation statement. Okay. Okay. So what needs to be done here is, there are two ways of doing this. Either you can start now. So what we do is either you can start off by we start off by the bank reconciliation statement, and then the bank statements balance, and then we work towards the adjusted cash balance, or we work the other way around, which is we take the adjusted cash balance and work towards the bank statement balance. So let's take the bank statement balance. The bank statement balance is 13,340. Okay. Bank statement balance 13,340. Right. So now we have to look at the things that are there in the cash book, but not there in the bank statement. We're doing the opposite over here, right? So let's quickly go through the things that are there in the cash book, but not there in the bank statement. So this one was, we should have done this before as well. Okay. This is there. Okay. Cash for check 454 is there. This is also there. This is also there. Okay. And then you have account receivable 6,210. This is not there in the bank in the banks. Wait, so this is there in the bank. 6,210 is there. All right, is that okay? And then you have account receivable 3,140. 3,140. Yeah, this was the mistake, right? This was the mistake that was made by the company, right? and that was recorded by the bank. 1,340, that was recorded by the bank, right? And so we cover this. We don't have to cover it again because it has already been taken care of here. The cash book error has been taken care of here, right? And then we have salaries, check 456, 2,530. This is also covered. We have accounts payable, which is 457, which is 3,280. This is also covered. We have inventory check 458. 458, as mentioned here, is they're still outstanding. So that is not there in the bank. That is not there in the bank statement. Check 459, that is there in the bank statement. Account receivable 8,440. This is not there in the bank statement. This is part. It's already they already speak about it here in on that 28th April onwards. All the checks are in deposit. It is not in transit. It has not yet been received. So yeah, this has not been mentioned in the bank statement. Equipment 460. This also is outstanding. It has not been mentioned in the bank statement. And finally, this account receivable as well has not been because this is 28th April onwards. It has not been mentioned in the bank statement, right? So now we have to we have to work. We have to adjust it the other way around in order to make the bank reconciliation statement, right? So first of all, we have to add, right? So what do we add? Okay. Oh, so then first of all, we add the. Okay. So whatever gets created here is minus on the bank statement, right? Sorry. Okay. So we don't add this and we don't add this. We add these two because this is what has been debited on the cash book. This is what needs to be added onto the bank balance, right? So we add account receivable. Let's put the date here just to make it easy. 29th April. Account receivable. The amount is 8,440. And then we have 30th April. We have account receivable, which is 4,290. Right? And then here we have, can put this value. Value. So that needs to be added, right? And then, so that is covered. And then what needs to be reduced, less, is these two. So we have on 27 April, we have check 458, right? This is, how much? This is 1,720, right? And then we have on 29th April, we have check 460, which is 8,000. All right, okay. So now if we sum this up, okay, 6,000. Okay. All right. So there's a small error here. Do you guys know what the error is?
Cash book.
This amount, the bank statement includes a payment of 1,430. This check does not belong to Ramadan Berhad. So this amount has this is a payment of 1,350 that should not have been made. So to reconcile with the adjusted cash balance, it needs to be added, which is this amount. Where is that? Yeah, check 739. 30th April. Check error 1,430. All right. Okay. There's a small difference, right? Of 90. Hmm. Okay. There's a small error somewhere. I'm a bit unsure of where exactly is it. Right. Okay. Yeah, that was the sorry. That was the error. I had calculated the cash book error incorrectly. All right. So yeah. So this would basically be the answer. You guys was that clear? So this is part A, which is the company's cash account, right? And this is the adjusted cash balance. And this is the final bank reconciliation statement. Yeah, was that clear? You have any questions? Either of you? Hello?
No question.
All right, so it was clear, right? Sister Mira as well?
Yeah.
All right, okay. So that's how that's how that is the method that you can use to solve the question, right? So this was the first method, okay? The second method is you do both of them simultaneously. To be honest, I prefer the first method. I think it's I mean it's the first method is slightly longer, I think, but you're more certain of getting things correct. The second one, so let's just do it. Let's just do the second method as well. Just to what do you guys think? Do you want to do the second method as well, or shall we just move on to the next question? What is better? Hmm?
I don't know.
All right. I think following this method is sufficient, and I think it is more scalable than the second method. So the second method, what you do is you you start off with the, so I'll just quickly, I will not do the whole thing. I'll just explain a bit of it. So what you do is you start off. Let's say you have two columns. You have the bank balance. Okay, you have the bank balance, and then you have the cash book balance. Cash book balance. Okay, so here the cash book balance was here the bank balance was 13,340, and the bank balance was the cash book balance was 20,070, right? 20,070. And so what you do with this method is everything that is there, that is like both basically what we did here and what we did in method one is use the method two, but it's just done together. So everything that is there on the bank statement, but not there on the cash book. What we did over here, basically we have to add and minus it over here, right? So we will add 3,200 plus 400. Okay, we can, essentially we would be doing this. We would add this. Okay, we'd be adding this, right? And right. So basically we would do it together. So we would do the cash book balance, and then we would make all the changes. We would plus whatever needs to be plussed, and do minus whatever needs to be minused, right? And we would get this, and then we do the same for the bank balance. So here we start at 3,300. We basically we do this again. So the idea is when you do the cash book balance and the bank balance together, it should appear side by side. So rather than doing one at a time, you do it simultaneously, and you hope for and you hope to end up at this value, right? So once you end up at this value, that is the adjusted cash balance, and then you can easily prepare the bank reconciliation statement. But I think method two is not needed already. Method one is more straightforward. You get the adjusted cash balance, right? And then you prepare the bank reconciliation statement using the bank balance, and then you hopefully you match between the two, and then that's what matters. The second method is really not needed. So yeah, if you want, you can take a look at that. But I really don't see that as a necessity. All right. Okay. So that is question one, right? So let's do question two, and then okay. Okay. Question two: the bank portion of the bank reconciliation for Suka Berhad of on at September 30, 2014 is as follows. Bank statement balance. Okay, this is the transits. Oh, yeah. Oh, here, I mean, they told us, right? So we can, because they told us it is deposit in transit, we can, when you're writing it in the bank reconciliation statement, it's better to write it like that. Deposit in transit, but they didn't mention over here April 20th onwards, they're still in transit. So that's why we're adding it. And then 27th and 29th, which is 458 and 466, we can put outstanding check. Outstanding checks. Okay. This is another format that they have used. The format is it's a bit different from how the format that I had used, but the result is the same. Okay. All right. So question 2, this is they have given us the bank reconciliation for September 30th. All right. Uh, and on September 30th, the adjusted bank balance agreed with the book balance. Okay. And then they talk about the 2014 bank. They show the 2014 bank statement, the checks and the deposits, right? And then they show us the cash records per books for the book for the cash book for October 2014, which are these values, right? And then they give us this additional information, which is a credit of 550 for the collection of a 500 ringgit note for Suka Suka Berhad, plus interest of 60, plus a collection fee of 10. Suka Suka has not accrued any interest on that note. Check number 1052 was correctly drawn for 5,150 for the purchase of accounting of office equipment. However, it has been incorrectly entered into the accounting records. Check 1052, 5,110. So over here it's 5,150, which is the correct amount in the bank statement. But in the cash book, they have recorded as 5,110, which is a mistake, right? Cash book error. And then number C, after reviewing the bank statement, the check issued for Sugi Hati Enterprise amounted to 3,620 was deposited to the account of Suka Suka Berhad by mistake. 3,620. Deposits, yeah. So this amount is a mistake that the bank, this is a bank error. The bank has mistakenly deposited money into the account of Suka Berhad, whereas they had to deposit into another account. So that also needs to be dealt with. That is what this means, right? And then thirdly, the NSF check was received from a customer, Rahman, for paying his account, which is the NSF check. Yeah, this is the NSF check. Okay, so now we can begin doing the question the way we did last time. Okay. All right. So first of all, let's match between the two, and make sure that they whatever is there on the cash book, whatever is there. Let's filter. We need to find out what is there on the what is there in the bank statement, but what is not there on the cash book, right? So let's look at the checks. There is the money that is paid first, right? So here on the 1st of October, we have a check of 1,200, check 1047, but it has not been recorded in the cash book. Okay, so we don't leave that alone. And then over here we have check 1048. This also has not been recorded on the cash book, right? 830, this payment. And then over here we have 1,050. This payment has been recorded on the cash book. Okay. Right. And then we have 1,051. This payment has been recorded on the cash book. Okay. All right. And then on the 13th, and over here we have 1,052. This amount has been recorded on the cash book, but it is a mistake, right? So in the cash book they have recorded 5,110. So it's a mistake. So we have to make an adjustment. So we will leave it there. And then on the 15th, we have a check of 4,230, right? But this has not been, this has not been paid due to non-sufficient funds. NSF means non-sufficient funds, right? Okay. So we'll have to work on this, right? And then we have 1053, which is 2000. This is what is there. This is there on the cash book. And then we have 1054, 8500. This is there on the cash book. Okay. And then 1556, 3310. This is also there on the cash book. Right? This one is a service charge. It is there on the bank statement. Of course, it will not be there on the cash book. Because service charge, the company gets to know about it only at the end of the month, right? When they receive the bank statement. So these are the things that are there on the from the payment side, from the amount that the company is paying out, a check side. Now, with regards to deposit, let's compare. So we have this amount on 1st of October, 240. This is not there over here. This is not there on the cash in the cash receipts journal. Right. This one on 7th October, 6,400. This amount has been received and is there on the cash book. This 2,290 also is there. 5,000 is also there. 12,700 is also there. These three values are there. All right. And then on 5th October, you have this 3,620 value, right? This was the error. If you remember over here, they talk about the error. So this error. Okay. This error. We need. This is a bank error. We need to work on it. But because it's a bank error, we will not show it on the adjusted cash balance. Of course, we would show it on the we would show it when doing the bank reconciliation, right? But we'll leave it there for now. And then over here we have 550. Because this is a credit memorandum, right? And they have explained it over here, which is a credit 550 for the collection of a 500 note for Suka Bride plus interest of 60 and less a collection fee of 10. So that, because this also needs to be added to the cash book, right? It has not been recorded. And then over here we have interest earned of 10 ringgit. Okay. Okay. All right, so we can begin the answer. Let me just copy this. Easy. Okay, so first of all, the balance for in the cash book at the end of the October is 4,290, right? It's shown over here, right? And now we have to cover let us all right. Okay. So now let's first of all, let's look at the checks and then we look at the deposits, right? So the first thing is check number 1047. This is there on the bank statement, so we have to add it to the cash book balance, right? So check 1047, 1,200. And then we have check 1048, is 830, right? And then we have, okay, the next one was check 1052, but this was a cash book error, right? So the actual amount that needed to be paid was 5,150, but 5,150 should have been credited. However, 5,110 was credited. So that means we have credited less than what needs to be credited. So now that remaining 40 ringgit needs to be credited. So here we'll put it as check 1052 error. Okay. All right. And then over here, this is over here we have 4,230 NSF. Okay. One moment. So it says over here the NSF check was received from a customer for payment of his account, right? Now this 4,230, this 4,230 would have been debited by the would have been debited by the customer. Would have been debited by the account in their by the company in their cash book. However, the company has now returned that amount to the bank. So now it has to be credited. That it is because it has been reduced from the bank balance. This has to be credited. Oh no. My bad. Actually, this needs to be okay. Yeah. This is a payment. This needs to go on the credit side because the company is paying it, right? They're not the company is paying the amount. This 1,200, it's a payment that the bank they have made, so it has to go on the credit side. It has to be reduced. The on the deposit side is what needs to be added. Right, that was my mistake. Okay. 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 So then we have that, and then over here we have the non-sufficient fund (NSF), and so this would be okay. Then we have the NSF, NSF, NSF. This needs to be credited as well. Just 4,230. All right. Okay. So these four have been cleared, and then we have service charge. This needs to be credited as well. Service charge of 50. Was that clear regarding the left side of the bank statement, of the check side of the bank statement? Was it clear? Was it clear? Hello? Was it clear? Chisinuru? Zakira, is that clear? All right, okay. Okay, then let's move on. So this we have taken care of this side. Now moving on to this side, we have a deposit of 240 that was not being shown in the company cash book. So we add it, right? So deposit 110, 240, right? And then these are fine. And then on 25th October, we have a deposit of 3,620. But as it was mentioned here, this is a bank error. And so a bank error, we don't do anything. We don't make the change in the cash book. So we'll leave this for now. And then over here, we have a credit memorandum of 550. So we add this as well. Okay. And then we have interest income on 10. All right. All right. So this is the it's negative. Okay. This is the sometimes it can be negative as well. So this is the adjusted cash balance is negative 1,260. Then we prepare the bank reconciliation statement. We use this format again. Okay. So we have the bank balance. The bank balance is 4,880. We have the bank balance. Where is the bank balance? 4,880. Okay. So for bank reconciliation, like I said, you have to look at the what is there on the cash book, but not on the bank statement, right? So from the cash payment side, okay, 2,620. This is there on both. All right, 3,840, and then we have 2,000. We have 8,500, and we have 3,310. All this is there on the bank statement, right? Payments number 1052. This was the cash book error, right? So we've already corrected this. We've already corrected this. So we can, cut that off. And then, but 1055 and 1057 have not been entered in the bank statement, right? So these are cash payments. And then on the cash receipt side, 6,400, this is there. 2,295,000, 12,700, all of this is there. But on the one on 28th and 29th October, 6,010 and 2,440 is not there on the is not there on the cash, and it's not there on the bank statement. All right. So these could be cash receipts that are deposits in training. So typically speaking, they would be deposits in deposit in transit. Okay. So yeah, let's make this 10 October. It's 20. Let's make it 28. 29. All right. So we have this deposit in transit. We add this 6,010. All right. And then we have a deposit in transit 2,450. 2,450. All right. And the error 3,000. Right here. So here they have made an error and they have mistakenly deposited 3,620 into the account. So over here, the error won't be plus, it'll be minus, right? It's just okay. And then less, okay. So these two are covered. All right. And then we have the payments, which is outstanding. We can take it outstanding check 1055. This is 4,480. This is 23rd. October. This is 31st October. 31st October. And this is 2000. Hmm. All right, so this is the balance carried forward here. Oh yeah, there's a bank error also, right? What is the bank? How much is the bank error? 3,620. Yeah. Hmm. Uh, Assistant Noor, are you following? Are you following this?
Yeah.
A bit. I did everything correctly. I'm wondering what is wrong. Go ahead. Hmm. Okay, let's just quickly go over it, I guess. We have the checks. That is removed 240. Oh, sorry. The deposits 240 is added, 550 is added, and 10 is added. And then from the payments, 1,200, 830, 4,230. So I am not sure what is wrong here. All right. Look, it's getting a bit late. So what I'll do is I'll go over the question again. So the first question we did, it was fine, right? We did it correctly. The second question, I'll just go over it again, and I'll find out where the error is, and all right, and then I'll explain it later, inshallah. All right. Okay, then inshallah we'll end the class. Thank you for attending. Assalamu alaikum.
Thank you so much.